So if you guys are watching this, make sure to click like and subscribe real quick, just so this thing gets boosted to as many people as possible. Let's make sure that, we get this thing out and that we start getting some motion in here. So as I'm going through all this, let me know if you guys have any questions, and I'll make sure to go through and answer them for you as we go through. Oh, I think I cut out here for a sec. All right, so not a lot of crazy news coming out in the US side. Biggest thing that I'm watching today is the ESM manufacturing. Basically, Empire State, meaning New York. This is the Empire State Manufacturing Survey. So the Federal Reserve Bank of New York goes out and conducts a survey of all the manufacturers, or not really all the manufacturers. I think it's like 200 or 300 manufacturers, just to kind of gauge sentiment in the market to see how confident they are in their ability to fulfill orders, to get orders somewhere on time, to keep manufacturing things and moving things around. So it's an overall early indicator of GDP, because GDP is both the input and the output that the market's producing. So what we're looking at here is a decline, massive decline in the ESM survey, which is the confidence. And the reason for this is there's a lot of different factors that go into the sentiment. Unfulfilled orders, for example. So if there's a lot of orders that were set to be put out, whether it was large-scale manufacturing orders, steel, plastics, metals, bricks, whatever it might be, all of those are down. And so there's a lot of unfulfilled orders. There's a lack of demand overall. We'll see that new orders and shipments plunged. General headline conditions, that's down. Let's see. Delivery times held steady for the first time in 2 years. So for the past 2 years, delivery times have been speeding up because of the efficiency and being able to deliver goods. Inventories edged higher. So inventory is not good. That just means they have a bunch of things sitting on the shelf because demand is coming down. So now we're going to talk about why the ESM survey is so low. This is not a surprise because the Federal Reserve has been conducting quantitative tightening, meaning they've been slowing down the economy on purpose. Like, one, they're raising the interest rate, which is going to slow down the economy. A lot less businesses and banks borrow, which means that they make borrowing harder for, individuals and businesses. But on the flip side, they're trying to kill demand by reducing the amount of money in the system. So they've been conducting quantitative tightening and removing $100 billion out of the economy every month. They just started this in June. So keep this in mind. All of 2021, even when the inflation numbers were coming in hot, the Federal Reserve was still pumping somewhere like 30, 40, $50 billion into the economy every single month. No, it was way more. I think it was over $100 billion into the economy every single month. In 2021, in the summer, when inflation prints came out at 5.4 or 5.7, the Fed continued to print money. And so they were printing money all through 2021. And then the inflation numbers started coming in hot. They were still printing money in 2022. So from January to June, they started reducing the amount of money printing down to 30 billion a month, and then eventually down to zero. So quantitative easing was done. Then they started in June quantitative tightening, which is pulling out $100 billion out of the economy. Now, why would they do that? What the Fed is trying to do is kill demand. If all of us don't have any more demand because everything is too expensive and the market conditions are too uncertain, all of a sudden prices come back down. Because in order for stores and gas stations and all these places, in order to get us to go back and shop with them, they're going to have to lower their prices. And so they're trying to reduce demand. And that's what we're seeing here. Manufacturing, early indicator. I think right now the market's on a great rally, but over the next few months, these numbers are going to start to play into the markets, and we're going to start to see a massive slowdown over in the corporate side. And so you're going to see stocks start to get hit, crypto start to get hit again. And that's if these market conditions continue to worsen like this. So we look at the ESM survey. This is the 2020 market crash. This is when supply and demand went to absolutely zero. So it's the worst case scenario that we've ever seen ever. But the last normal worst case scenario is the 2008 Great Financial Crisis. You can see we're almost back at those lows in the ESM survey. That's not good. So, yeah, it's not looking good. They basically blocked off all the US recessions in the gray zones. So you guys can see here, 2008 recession, we maxed out at the -40 zone. 2020 recession, we maxed out at the -80 zone. And then 2022 recession, which is what we've been watching. This is sort of the recession watch. Right now we're sitting at -31. So very close to the great financial crisis lows. All right, very, very low. So that's kind of what I'm looking at. That's the major newsprint for the day, which is the ESM manufacturing survey. Obviously, a bunch of other news events are going to come out. And so I'm going to show you guys the 3 biggest news events to watch out for to basically gauge whether or not the markets are going to turn around. And by markets, I know I'm speaking generally, but let's talk about stock markets. Let's talk about crypto markets, because both of those have been moving around the overall larger business cycle. The larger business cycle of the economy right now is in a massive, it wasn't a massive retracement for the beginning of the year. And then now since June, we've had a massive recovery. And so in order to gauge whether this is the bottom of the market and whether stocks and cryptos are going to continue to the moon, or whether we have one more big dip like everybody else thinks, is to gauge these 3 or 4 major news events that are about to come up between now and the end of September. If those news events all line up in a certain way, we'll have a pretty good idea of which way the markets are going to go for the rest of the year. And of course, we can all capitalize on that as traders and investors. Wait, what is on my shirt, you ask? This, ladies and gentlemen, this is the custom limited edition, first edition. This is an actual patch. This is stitched on. This is part of the shirt. This is not laser printed. But these are the Chart Addicts hoodies that we launched a few years ago. These are the limited editions. It's a rainy day here in the city, so obviously I have this on. Extremely comfortable indoor attire. If you guys haven't grabbed yours, make sure that you guys click the website, chartaddictsfx.com, link below, and grab yours. Yeah, these things are for sure. So let's talk about some other big news events that we're looking at for the week. So 10:50 a.m., we actually had an FOMC member speak. Just a workshop, whatever it is. Okay, so big newsprints that I'm personally watching, and obviously I'm more focused on US markets. If you guys are watching this around the world, if you're involved in US markets, this is going to be helpful. I'll also be going through some other big news events in the world, but I'm not going to be keeping up with monetary policy for Australia, monetary policy from Bank of Japan, unless there's a major shift. And so if there's a major shift in England, there's a major shift in Europe, there's a major shift in Japan, there's a major shift in any of the major currency nations, then I'm going to cover those news events. But if it's like day-to-day CPI prints, GDP prints, anything like that, I'm mostly going to stick to the US dollar, and I'm mostly going to stick to US markets and equities, because that's where the focus is. So what I'm looking at is this Wednesday, we have core retail sales. I say this all the time. You guys are going to hear me say this a lot on these FX forecast streams. But the US consumer is one of the strongest economic forces in the world. Core retail sales is a huge indicator of economic health in America, huge indicator of economic health around the world, because all the stuff that the rest of the world manufactures, whether it's cars in Asia, cars in Europe, whether it's all of the production goods in China, most of it is getting consumed in the United States. And so if retail sales are up, that usually shows that the global economy is functioning in a healthy way. I'm also watching for stocks. I'm trying to see, are stocks going to keep going? Are cryptos going to keep going? That's my main focus. Is I'm trying to figure out, is the market going to continue for the next year? Do I have to keep moving stuff around and taking profits? Or can I just hold my investments and my trades? And so when I look at these retail sales numbers, we want to see an improvement month over month. But the most important thing is the expectations that the market sets need to get met. You guys can see here, there's a forecast tab and then there's a previous tab. So the forecast is that there's a 0.1% growth in core retail sales. And then there's a 2% growth in retail sales, the headline retail sales number. So that's the expectation that the market is setting. Now imagine these numbers come out extremely negative, extremely off based on what they're expecting. So a lot less people bought a lot less stuff. That's not good. That's not good for stocks. That's not good for corporate earnings. That's not good for the economy. And so at the end of the day, it's not really about the number itself as much as it is about the expectation the market has set, and then how drastically off the actual result was. So that's kind of how we look at how the market reacts to certain things. A lot of people tell me, Roy, there's negative news that came out today, or so-and-so said something. Why didn't the market do blank? Why didn't the market go up? Because it was good news. Well, because the market had already expected the good news for weeks. It already priced it in. The only thing that would make the market turn around is some sort of surprise. And so it's important to recognize that when you're looking at news events, one, the markets are forward looking. They've already expected this for months and months in advance, and they've already been putting in their bets. The only reason they would change their minds is if there's a big shift in, something in the game. So something happens geopolitically overseas, something happens in politics, something happens, just unexpected. COVID, for example, that'll make the market start to react in a crazy way. So what else are we looking at here? There's FOMC meeting minutes. So Wednesday CPI print, pretty big, but I don't think it's going to be a crazy market mover. The 25th of every month, like 5 days before the end of the month, that's when GDP numbers come out. So we already talked about a GDP print, an early GDP print that released early in August. And that's quote unquote marked the recession, the start of the recession, because we had 2 consecutive quarters of negative GDP. Now, the truth is that number was an early number. It was more of like an estimated number. The number that comes out on the 25th is a little bit more accurate. So this is kind of like, this is reflected as an annualized change. So basically, like, how did it change on a year-over-year basis? But this is supposed to be a more accurate representation of GDP than the early number that we saw back in what was it? The first week of August. So what we're looking for is the first quarter was negative in terms of growth. So GDP is the difference between the input and output of a certain nation. So just kind of all the goods and services that have been sold, all the productivity, all of the transactions, and just got all the economic activity inside of a certain nation. So it gauges the growth of that economy. So you can either expand your GDP or you can contract in GDP. That's kind of how it's phrased. So a contraction, we've already had that in the first quarter of the year. That's the first 3 months. And then a lot of economists said that we basically had a second quarter that was negative as well. These preliminary numbers will confirm it. And then in September, we have the Fed meeting where they're going to raise rates again. So in August, there's no Fed meeting. I don't know if you guys noticed this. This is why the markets have been so bullish. There's really no news event that's going to step in and get the markets to turn around, because the Federal Reserve is the one that's setting the policy. They're telling people green light, red light. If you guys have seen that show, what's that show on Netflix? Red light, green light. You guys know what I'm talking about? Come on, y'all, help me out here. Do US markets affect Canadian markets? Yeah, of course. The Canadian dollar is very heavily reliant on trade with basically everybody, but mostly for oil. And all the oil in the world is transacted in dollars. As part of the agreement the whole world has. You can really only sell oil in dollars. But what's that show on Netflix? Squid Games. Okay. So it's like that. Basically, the Fed is telling people when to play and when to back out. And that's the whole game. So all of August, there's no Fed meeting. And so they just green light. And so you run. As soon as these prints come out, you stop. Red light. And then the Fed comes on and they're like, all right, we saw the prints, but there's nothing too bad going on. You guys can play again. Green light. The Fed is basically Simon in that game. Simon Says. I appreciate y'all in the YouTube comments letting me know what it is. So those are the big prints. We're looking at CPI and we're looking at GDP, and I'll kind of go through those a little bit just to show you what that really means. Kind of give you guys an overview of how we look at the health of a country. How do we look at a nation and basically tell, is it healthy or is it not healthy in its economic conditions? And I'll show you guys I'll show you guys a simple formula that I use, which we teach in the courses, which is basically how, like, the 4 main metrics that I look at for the health of an economy. And I'm looking for this Fed meeting in September. I got to go through this. I could just go to the Fed website, but I'm just being lazy here. Okay, so the 21st of September, if you guys want to mark your calendars for this, that's the FOMC statement, their economic projections. And so they're going to be talking about like basically from August to all of September, they're going to be getting CPI prints and inflation prints and GDP prints and everything in between. And they're going to start to formulate their opinion on what the economy looks like for the rest of the year and how they're going to set monetary policy. So we're going to be watching out for that because that's going to be the red light, green light for the rest of the year. And that's basically how markets move. So if you guys haven't been aware or haven't become aware of something called sentimental analysis or what market sentiment is, it's one of the most important factors that drives markets. So usually markets run on stories, which is like, okay, the Fed has their foot off the gas, and so the markets are pushing forward because the Fed's not going to step in and crash markets. That's a story that the market tells. It's called a narrative. And then the narrative ends up translating to a sentiment. The sentiment is how everybody in the market feels about the narrative and feels about the current condition. So when the sentiment is risk on, so there's two main sentiments that I look at, which are risk on and risk off sentiments. When the market has a risk on sentiment, they have a high risk appetite. They go in there and buy risky things like stocks and crypto, right? Those are high returns. They can give you really high returns. Those are high returning investments and assets, but they're also higher risk. And so when the risk on sentiment is in, you start to see a lot of those assets go up. And what do you see? You start to see a decline in the dollar. So people are getting out of the dollar and getting into some of those higher risk assets. When the sentiment is risk off, you see the opposite. People get into safer things like bonds, cash, and maybe some other cash equivalents. And they get out of those high beta, high risk assets like stocks and crypto. And so that's kind of what we're looking for. The 21st of September, August 25th, CPI print. And we should have a good recipe for the rest of the year after those two main prints. All right. So I'll take you guys' questions if you have any. I'll take all questions if you guys have some, just regarding fundamentals, regarding either the market sentiment right now, the ESM manufacturing survey. I know I was going to walk you guys through those 4 things of how to gauge an economic health, but let's go through some questions real quick. You guys can ask literally anything. Crypto, Forex, like macroeconomic news, central bank policy, market conditions, capital markets, equity markets. You guys can ask about anything. So get through and ask some questions. Let's see what you guys got. And let me put this up on Instagram so we can get some people in here. If you guys wouldn't mind, drop that like and subscribe if you guys are on YouTube real quick. I know it doesn't seem like a big deal, but it goes a long way. It goes a long way, long way. Chat box. That's all I'm at. And if you guys have group chats or you guys are part of any trading groups or anything like that, if you guys wouldn't mind posting this up, for some reason, I didn't even show up on my own page. We dropping sauce here. We're just getting started. These are the Monday streams, people. These are the Monday streams. Let me get this on Instagram, get some clout going. So the goal for these streams are to start getting guests in here. So I'm going to start to get experts in certain areas, like whether it's stocks or whether it's trading or whether it's crypto or whether it's market analytics, whether it's real estate, whether it's bonds. I'm going to try to get people in all these different sectors that are experts. I'm going to try to get them on these Monday streams to come and talk to you guys about what's happening in the world, what's happening around news, and what's happening in the fundamentals. So my bad. I'm just posting this on IG real quick, letting folks know that we're live and we should be good to go. All right, so let's go through some of these questions real quick. Let's go through questions. So Roy, this is what we need to wait for to determine if we should buy crypto. Well, the best way to invest in almost anything, and this is not financial advice, please consult a financial professional. But the smartest way to invest in anything is to dollar cost average, which means that as the market is dropping or as the market is retracing to a lower price, you can buy more and more of that asset at different prices. And then when it recovers, you kind of have the average of all those prices and you don't have to like miss out on anything. A big problem that I see in the market is that, or in investments or in anything, because I used to work as a wealth manager at Merrill Lynch. That was kind of my full-time career path. And I would see a lot of people panic whenever their investments, basically whenever their investments were in drawdown or whenever the portfolio or the market had a down day or whatever it was. And so the most simple thing that everybody can do is if you really believe that your investment was going to go up over time, in reality, it's going to look like this. Okay, it's going to be a lot more messy. And then over time, you kind of have this smooth uptrend. So you can't really panic about these down moves. So what I do is whenever the market does make a down move, I start to buy at different intervals, but I don't put all of my money in at the same time. So if I had only $1,000 to risk, for example, a lot of people are like, this is when people misunderstand advice. When you hear someone say buy the dip, that doesn't mean go and put all of your money in right now. What buying the dip could mean in a smart way, this is kind of what we teach over at ChartAddicts, which is the dollar cost averaging. When you dollar cost average, as the market dips lower, you get to buy it for a better and better price. So let me give you guys a quick example. I'll try to run through this quickly, but this is like the basics of dollar cost averaging. And let's use an example of, let's say a shoe that costs $100. All right. Actually, that's not even a good example. Let's say a stock. So you can buy the stock here at 100. All right. You put in, actually, this is going to take a little bit longer to go through the dollar cost averaging, but let's just say you have $1,000. You might put 250 here. And then as the crypto market starts to dip down lower and it finds a new floor, you might put another 250 here. And then as the market dips lower, you might put another 250 here. And if the market starts to recover, you can put another 250 here. So now the whole $1,000 has been invested. You got the average of this price, this price, this price, and this price. And then when the market eventually recovers and goes back to all-time highs, all of these positions are in profit. And so the way that dollar cost averaging, let me show you guys what the averaging means in dollar cost averaging. Averaging means you take the average of all the entry prices that you have, and that's your entry price. And so unless you can perfectly time the market and get in at, let's say, Bitcoin at 20K, most of the time you're going to be buying some at 30K. Let's call this 30K, some at 25, and some at 20. And on the way up, you might have got 27. So here's how averaging works. You have to add up all the numbers and then take the average of all those numbers. So you got 30, 25, 20, and 27. Let me do this quick maths. 6, 8, 10. It's got 102. 102 divided by 4. You got about 25.5, I think. It could be 25.5. Okay. So that means that yes, you bought some Bitcoin at 30K. Yes, you bought some Bitcoin at 25K. Yes, you bought some Bitcoin at 20, and you bought some at 27, but your average price that you entered is 25K. And so the way that your results would show is that you basically bought $1,000 of Bitcoin at 25K. That's your average price. So when it goes to 75K, you will have made 3x your original investment. All right. Does that make sense? That's the beauty of dollar cost averaging. Now, why do you do that? Why not just load up all the money there? Because realistically, people, if you could time the markets, if you knew when the market bottom was, you'd be a quadrillionaire, right? Because it's very hard to time the bottom of the market, especially in real time, unless you're over at ChartAddicts or you have the Enigma app. It's just a shameless plug here. But if you're not actively watching, if you're not actively day trading like we do over at ChartAddicts, and you're just sort of looking at the markets on a day by day, you're looking at the news or whatever, it's going to be very hard to accurately time the bottom of the market. So the most responsible thing to do if you want to get involved is to, instead of chase or instead of have FOMO or have any sort of emotional ties, you just look to get in at different prices. Then when the market recovers, you have the average of all those prices and you're in at a great place. Is it too early to be loading up on major stocks like your Amazons and Apples? You have to be able to expect one more downturn or an extended bear market. What I'm seeing now is if the Fed can't come and save the day, if the Federal Reserve, which is usually kind of like what comes and saves the day whenever we have some kind of economic downturn, if they're not going to come and pump money into the markets, we're shit out of luck. So the markets could have an extended recession or an extended bear market for 12 to 18 months. And so if you're not prepared to hold that sort of drawdown and to continue to invest in those names that you believe in, then I probably wouldn't be investing now. However, when you use the dollar cost averaging model, then you can get in at all these different prices. And even if there is a downturn in the future, you still have some dry powder or some cash on the sideline that you can deploy when the market gives you that opportunity. If you're going to keep waiting for the perfect opportunity, or you're going to, put all your money in too soon, you're going to have to expect some pain in the short term, right? That's just the way that investing goes. Is it elementary school math here? Yeah. We're getting a PhD in elementary school math. So if we're on a risk, so if we have risk on sentiment, that means the dollar is weak and assets are high. So the dollar being weak is not necessarily a requirement of the risk off sentiment. It just means that institutions want to go out there and buy risk assets. And usually when you buy risk assets, you're not selling something else off. You're usually going from cash that you have sitting in a bank account. Like if you're Apple, you have a bunch of cash just sitting in a bank account. And you also have, you can use some of that cash to go out there and buy back stock and to buy other companies, to buy competitors and things like that. So you'll see a little bit of a decline in cash while other areas are starting to make a push. But it's not necessary that the dollar drops. I'm just reading through some questions here, reading through some of these questions. Let me know if you guys have any questions about news and fundamentals. All right, so we'll go through those four basics. Wait, how would you personally grow a $1,000 account percentage-wise weekly? So I don't know if you're talking about trading, day trading, or if you're talking about investments, but in day trading, it's pretty straightforward. I can walk you through some of it. If you guys let me know in the chat, if you guys want me to go through how to grow a $1,000 account in Forex or just through trading indices on margin, let me know. If not, I'm going to go through fundamentals. I'm going to walk you guys through the four things that I look at to gauge the economic health of a country. So whether that's like just basically any country, just look at these four metrics and you can be able to tell kind of on a scale of how well they're doing. So in other words, the dollar value has a dip because it's getting spent at large amounts. Yes, exactly. There's a mass migration. Investors are having a mass migration out of a certain asset, so out of the dollar into another asset. So they'll go to their checking account, saving account, whatever cash account that they have, and they'll go out there and buy assets in the open market. For most corporations and hedge funds, it's a treasury account that they hold, which is like a cash balance, and then they just wait for opportunity and they go in there. Now, when the entire market is doing it and it's like a large scale thing, that's when you know that it's all the institutions and central banks. It's not just one or two funds that are doing it. It's the overall sentiment in the market. Let's get out of cash now and let's get back into these other assets. You said yes in Forex and in trading indices. Okay, so let me give you an example. Said how to grow a $1,000 account. Well, what's your goal? For example, like percentage-wise, weekly, et cetera, et cetera. We can go through some examples here. So I don't know. Let's use Nasdaq 100 as the example. This is a trade I sent out on the Enigma app this morning. If you guys haven't downloaded the Enigma app, you have your first month free. This is honestly the best opportunity of a lifetime. We're already in profits on this trade. We've already had a great start to the week. The win rate is over 90% since we launched the app, and you guys have a 30-day free trial. It's a 30-day free trial to get access to these trades. You can copy and paste the trades just like us and be able to put them either in a demo account or live account, and you can see the results for yourself. All the results are posted on the app as well. And so just go out there, see the results. Numbers don't lie. How to grow the account is, let's use this trade as an example, which is if you have $1,000 account, the minimum lot size that you can use with an average broker, let's say unregulated broker, is a 0.01 for indices. Now I understand different brokerages, they count contract sizes differently. Let's assume that you're using one of the unregulated brokerages. The one that I use is NVFX. I can put the link below after the stream is done. In the recording, I'll put all the links for everything I mentioned. I'll put them in the comments below or in the description. But 0.01, if you risked it on this trade, this was 420 was the stop loss and 500 was the entry. So it was an 80-point risk. So you risked $80, for example. This is if you used the smallest possible lot size that's available on most brokerages. Currently, as the trade stands, you would be floating $142. So if you started the account this week, let's say you had a $1,000 account and you took this trade, you would have been risking $80 for the chance to make $420. For some reason, I'm in love with this number, 420. So $420, risking $80. Right now, you're currently floating 140. So what a lot of people do is they want to hold the trade all the way through, which is possible, right? I'm personally holding a little bit of the trade, but let me show you guys another way to do this. If you have $140, well, actually, you can't even close the 0.01, so I don't even know what I'm talking about. If you did close the entire trade right now, 142 bucks, you'd be floating 14% on the account. Now, let me show you guys something crazy. Let's look at the top returning hedge funds last year. Last year, in 2021, let's look at the hedge funds that had the highest returns. Can they give me a 1 through 10 list? What is going on here? Okay. 12.6%. That's number 9. Who's the number 10 spot? Millennium Management. Millennium Management, all right? Millennium Management last year did 12.1% returns on investment. So if you took this trade today with the smallest possible lot size, you would make 14% on that $1,000 account, risking about 8%. So you would already, let's say you took this trade and you stopped, you would automatically have the highest return out of all of these hedge funds. Well, you would at least be in the top 10 list. Do you guys see the difference between trading on margin and then, whatever hedge funds are doing, trading in all these alternative assets? Trading on margin gives you a huge advantage here. So you don't need to risk that much money to make money. Now, let's say that you held the entire trade. So if you close the trade, you would make 14%. You'd make more than all the top 10 hedge fund in the world. If you hold the entire thing, sorry, the original take profit was up here at 930, so it's 420. You would make 400 bucks. Let's call it $420. Now that would be a plus 40% gain on your account in one trade. Now that trade might take another day or day and a half to play out, but that's part of day trading. It's the patience part. So you can make 40% on this $1,000 just by holding this trade, and you only ever risked 8% of your account. You guys see how that makes sense? My Enigma app doesn't give me notification or pop-up for of Signal, any help. First things first, go to your settings on your phone and make sure that your notification settings are turned on. If your notification settings aren't turned on, Apple cannot send you a notification. Second thing is make sure you're logged in. A lot of people are like, Roy, the app's not working. The app's not working. I'm like, send me a screenshot. They're on the outside login screen. You got to log in. All right, now how do you log in? We are making the process a little bit easier, but for now, this is the best way that we knew how to do it. You go to enigmafx.app, enigmafx.app. You go down here and you go to click start your 30-day free trial. Oh God. You start your 30-day free trial. You go through the steps, you type in your personal information, and then you use the same login that you create to get into the website. You use that exact same username and password on the app. Type it in the exact same way. Some of y'all, the password is lowercase and you typed in the password on the website in uppercase. Just please, same password, same email. If you do that, you get full access to the app. We're hitting banger signals. What does the app include? Obviously, we just send out trade alerts. We have the results for all the trades. So you guys can go through here and see no fugazi shit. You guys can literally see the exact minute and the exact second that the signal was opened and closed. So you can verify for yourself where the trade was at that moment. There's no bullshit happening in the background. None of these people screenshotting the winners and deleting the losers and all this bullshit. Just go through. Everything is transparent. Best signals app in the world. That's my shameless plug. Shameless plug. All right. So what other big news is happening right now? I guess we can talk about crypto. We can talk about the Fed's decision in September and what that might do to the markets. We can talk about investing in NFTs and Web3 gaming. You guys let me know. Load up some things in the YouTube chat and I'll answer you guys' questions. So in other words, the dollar value has a dip because it's getting spent. Yeah, we already went through that. My Enigma app doesn't move. All right, go. So let me know what questions you guys have regarding news, and I'll kind of just walk through some new content that we got going on. Bada boom, bada bing. So new podcast that I really want you guys to check out. This is obviously from us, but we've been launching some incredible podcasts, and I'll kind of just sign off what all the different videos are, because we have so much content out here. I kind of feel like it gets overwhelming because we have a bunch of different series. Let me break down exactly what we have, and you guys can fit this to whatever your schedule is. If you're looking for crypto in the next month or month and a half, you have a resource to come back to. If you're looking for free Forex or how to get into trading information, you have somewhere to go back to. So let me show you guys what all we really offer here. One thing I'm very excited about is this crypto mastery course. This is something that we just launched. There's going to be a lot of videos dropping, y'all. Every single week, we're going to drop a new video. This is the upcoming one. It drops tomorrow at 6 p.m. But basically, it's a full crypto course for anybody who wants to understand the crypto space fully. We're going to go through the history of money, how the monetary system works, inflation, digital money. Digital money is really huge. Understanding how credit cards became online payments, became ACH, became direct transfers, and is now turning into blockchain payments. Right? What is Bitcoin? The history of Bitcoin, blockchains, crypto, how to buy it, alternative digital assets like altcoins and what those are. The difference between tokens and cryptocurrencies, or the tokens versus a coin in the market. The crypto market explained, so sort of the market cap, the biggest holders, where all the money is. The crypto market cycle, wallets and exchanges. Basically everything you need to become this is going to give you a PhD in crypto, and it's fucking free, and it's going to drop once a week. So from now till the end of the year, we'll be dropping a new episode every single week, and it's all already lined up. It's all already lined up. We got a bunch of great content lined up for you guys. Let's look at what all we have. For all the traders out there, we obviously interviewed some of the biggest names in the FX space and in crypto, and just sort of, TradingView, which is the app that we all use to mark up our charts. This is the app that I was just showing you guys. Oanda is the broker that's feeding its price quotes directly into TradingView. So TradingView is using Oanda to get these accurate price quotes. So the person who founded Oanda, we did an interview with him, I want to say like 3 or 4 months ago. He also spoke at the trading conference that we just held in May. So if you guys don't know, we held the FX Summit 2022 conference. Investors, crypto experts, traders, supercar, everybody. And it was the most incredible event down in Miami. We had Dr. Olson speak. We also had TradingView, the founders of TradingView, come and speak. We had a former NFL player, blockchain expert, Lewis Neal, come and explain his new wallet and a lot about quantum security and crypto security. So the institutional series is more to look at the back end. We kind of, we have good relationships with all of these institutional players. And so it's great to be able to hear from their perspectives and to sort of have them on the podcast. For all my traders out there, if you guys are interested in trading, we've basically had every name in the social trading space on our podcast. Everybody from Swaggy C. We just dropped another incredible podcast, which is like a crypto masterclass with Emil. So I would highly recommend watching that one if you guys are interested in crypto. Abel Melendez, Michaela, who runs Huobi Global, one of the top 5 crypto exchanges in the world. Alex Santi, he's a millionaire trader down in Florida. Q Banks and Anthony, you guys know who Q Banks is. Basically everybody in the industry. We have an incredible podcast series. Some of the biggest names, Mamba FX, QB Stu, James Storms, Lambo Raul, FX Alex G, Uncle Ted, Drew Banks, Raja, Wicks Don't Lie, Cam Hawkins, right? Trading Nut. We have podcasts with everybody. So you guys can go and check those out. They're live on the YouTube channel for all my traders out there. Student Spotlight. This is a series that we put up. Basically, when you become a successful trader at ChartAddicts, we'll highlight you and we'll put you up on the Spotlight series and we'll allow you to share your story with other up-and-coming traders. Because as cool as the Lamborghinis and all the other shit is, hearing from somebody who's in your shoes, who just succeeded and the things that they're doing, I feel like is extremely important. These are people who are making thousands and thousands and thousands a month just off of learning the key concepts and off of the practice they've put in. So just saying, you guys can go check out that series and hear it from them. What else we got? We got the Thursday live streams. Every single Thursday, I stream live and I trade live. We've had banger live streams week after week. And then these Monday streams that you guys are on right now. So we offer a lot of different things. I know we're all over the place, but it's just incredible content to help you guys get prepared for the crypto revolution that's coming. We want to make sure that you guys are ready and prepped, like to really take advantage of the future that's here. Some of you guys aren't sitting on more than 4 figures right now. And what you really need to do is look at the avenues that can take you in this bear market that can take you to 6 figures. And a lot of the times, a lot of people aren't looking at the big money opportunities because you're so focused on these smaller sort of plays that you're doing and you're sort of like grinding it out when there's an obvious longer term play that you could be looking at and finding value there. And so if you look at the crypto market cycle, every single bear market has provided an opportunity for people like us to get into names that are undervalued and to take advantage of the next bull run. And so if you're not looking for names and for developers and for communities that are building in this bear market, you're going to have a lot of trouble here, when everybody else is making money and you're not making money. And I just want to say this honestly, y'all, because in 2020, when I wrote an article telling everybody in the ChartAddicts community, every single time there was a bear market dip, I urged the ChartAddicts community to buy Bitcoin. The biggest reason for that is if you believe in an asset, whenever it loses value or whenever it drops in value or market price, not value, price, you always see it as a discounted opportunity to get in there and accumulate more of that asset. Now, when you don't really believe in the asset, that's when you get very sketched out whenever you see those numbers start to go down and you don't really want to buy more of anything. And so the real key is when you've done your research on what you're going to buy before you buy it and you actually believe in it, whenever it dips down, you can buy more of that asset. Major key. Do you feel like the government is trying to tell people we're not heading into recession? Eric, weren't you the guy that was talking shit on the last live stream, bro? You were that dude that was talking mad shit. We were floating like 150 pips, 150 points, my bad, on the NASDAQ trade. You were out there spamming the chats and acting like a child, bro. You don't get to ask questions in here. What is this? People, all due respect, I'm out here for the community and I'm out here trying to give you guys the fundamental sauce. Basically, I've marked off an hour or 2 hours every Monday just to talk about the market news, to look at the market news in advance, and to give you guys that prep. But I respect myself. I respect the time and the value that we provide here. If you guys are being childish in the chats, if I see you in the IG comments being a hoe and you're trying to come into the live stream trying to ask for advice, buddy, you fucking something else. But let me know, guys. 3 quick questions on fundamentals and we can wrap up this stream. I think we've been on here for about an hour. 3 quick questions on fundamentals. Before you head out, make sure to click a like and subscribe if you've taken anything away from this. If you learned anything about fundamentals, anything about trading, if you found anything valuable this entire time, just click like and subscribe on the way out. Eric Z says, what? This is my first time here. Bro, I remember you, fam. I remember you. The last recording's on YouTube. It's on there. But I will answer this question, though. Do you feel like the government is trying to tell people we're not heading into a recession because they don't want people to panic? Yes. It was very obvious. I just started trading, and honestly, this industry is too toxic. It's just promoting their signals and not actually sharing value and explaining why most people are failing. I mean, there's nothing wrong with signals. You just have to, you as an adult have to understand what you're getting yourself into. So this is where I'm gonna get into a rant. This is where I'm gonna get into a rant real quick. I mean, I'm gonna just say this honestly because I'm trying to get you guys some truth. As an adult, you have to understand exactly what you're getting yourself into. At ChartAddicts, right? ChartAddicts, the company that I run, we have a giant team and we're helping, hundreds and hundreds of traders around the world. We have 2 different options. If you're trying to learn how to trade, you go through and you take the personal coaching and the education and the courses. It's a one all-inclusive program. It's $99, and basically you get access to courses, which is the education, live streams every day, just like this, where you can ask questions and interact. And then you get personal coaching one-on-one to build yourself a strategy and to make sure that you're heading to the results that you want. So if you're actually committed to the growth, if you're actually committed to trading for the long term, you're committed to becoming self-sufficient and not relying on other people's signals and not relying on other people, you have to pay for education. You can't pay for signals and something else. You have to pay to learn how to do this yourself. ChartAddicts is the best place to do that, in my opinion, because you can work one-on-one with somebody, which is the fastest way to grow in any skill. If you want to learn how to cook, standing next to a chef at a restaurant while he explains all the core fundamental things to you is the easiest way for you to learn. And so this is kind of the system that we built. Now, not everybody wants to learn this for themselves. A lot of people honestly are lazy as fuck. I'm going to tell you guys this. Or let me say the categories. Not everybody who takes signals is lazy, because I know people come at me when I say this. A lot of people know how to trade, but they prefer to pay $90 and let us trade for them. Why do you want to spend all day waiting for price to hit your entry or setting alerts and trying to get in there and setting limits and having to go back and monitor the trade versus getting 3 push notifications from Apple and from Enigma that tell you when to open, close, and take partial profits on the trade? So a lot of people know how to trade, but they're using it as a confirmation. But that's probably like 20 or 30%. 70% don't really care about learning how to trade. And it's a lot easier to offload the responsibility to somebody else, which is fine. We'll take that responsibility. That is our job, that's our job as a player in this game, is to provide as much value as possible and to take on that responsibility. But you have a choice of which one you want to be. You can either go out there and learn how to trade and become self-sufficient and be the walking ATM, but that's going to take you a little bit longer, right? Because practice does involve time, right? You can't just have practice. It's a linear thing, guys. You can't just have practice, and be sitting in the same place. You have to practice over time so you can build your repetitions. The other side is you could just offload the responsibility to someone else and just pay for signals. Be mindful of which one you're signing up for. Looking forward to joining ChartAddicts. Abel's Fundamentals Bootcamp starts today. Shout out to Abel Melendez, right? I know that he's got his own course over there. He's got his own thing going on. Huge salute to him. Great friend, great guy. And I think they're very qualified over there to talk about fundamentals. So love those guys. I'm actually thinking about getting Abel on some of these streams on Mondays and getting their whole team. Like, I know that you probably know Anthony if you're in that group chat. I just signed up for your app. Hopefully I can learn how to find high probability setup. How much do you charge for one-on-ones in person? So it's $99 or in person. I don't do any in-person stuff for now. We're going on tour around the country. We'll be doing live classes, but as it stands right now, we're strictly virtual. Personally, I'm only doing advanced coaching, but a lot of the coaches on my team, they're available basically all day, every day, right? So you have availability throughout the week to go and work with anybody. And it's $99, gives you 5 sessions a month. Now, 5 sessions is crazy. These are 30-minute high-intensity sessions where you can learn a lot. You can bring a ton of questions, and these people will basically match your pace. However much you bring to these coaching calls, they will match you. If you don't bring anything, they'll guide you. But 5 coaching sessions, if you think about going to a gym, 5 personal training sessions is enough to set yourself up for a while. And so you guys can come and get a chance to feel it out and see what we offer. But working with a coach, you have to be open to criticism. You can't be one of these guys that comes in here and it's like, yeah, I want to improve in my trading. I want to become the best trader ever. And then we tell you to do something. We tell you to stop taking 20 trades a week and to start sticking to a certain time frame because the smaller time frames are confusing you. And you don't want to listen because you saw something on YouTube one time. We can't fucking help you. What we can do is show you exactly what you need to do to improve. Whether you do it or not is all up to you. That's the Chart Addicts promise. Everyone's like, oh, you can't make guarantees. Well, I'll guarantee you that we'll make you a better trader as long as you put in the work. Yes, you can make as much money as you want in trading. And yes, you can be consistently profitable month over month. But you guys are like how I added that. There's a but. You have to put in the work. And so if you're willing to do that, anybody can succeed in trading. You can succeed in trading. It is not that hard. It's like trading is not a mystery. I didn't catch this trade this morning because it's a mystery. It's a very straightforward process that happens. There are rules to the markets. And if you don't understand the rules, people, you're going to have a hard time trading. I kind of went through this on the how to succeed at trading stream the other day. But basically I was saying the only 2 reasons that traders lose in the markets, the only 2 reasons that traders fail is either you don't know how to trade or you know how to trade and you're fucking up the system. If you have a proven model that you've either adopted from somebody else or stress tested yourself, that model has a certain win rate. It's got a statistical win rate that you know the market's going to stick to. 70%, 80%, 90% win rate, whatever it is. It comes with the strategy. You enter double bottoms on the daily, 7 times out of 10, it's going to go your way. Now, if you hesitate every time it gets to that entry, and then it starts to run in your direction, and you're chasing it, and you get caught in drawdown, and you're closing these trades, right? You're going to fuck up the results of the trade, or you're going to fuck up the results of the strategy. And so if you want to have consistent results, you have to be consistent, and you have to use a strategy consistently. It's real shit. This is real shit. He said, I just signed up for your app. Hopefully I can learn how to find high probability setups. Like I just said, if you want to learn how to trade, you're going to have to go to an education platform like the Chart Addicts platform that we have. If it loads. The Chart Addicts platform, we do personal coaching, which is one-on-one. We do educational courses. So this will actually teach you how to find high probability trades. And then live trading calls just like this, so you can actually trade with us and see how we see markets, get access to all of our educators' levels and everything like that. So if you're interested in learning how to trade, this is where you're going to be. But if you're just looking for someone to trade for you, right? Expert traders who have already put in years of work, and they're going to be finding the setup, spending the time on the charts, and giving you the signals, the Enigma app is going to be where you want to go. Plus, PS, the Enigma app has a 30-day free trial, right? Like I bleed chart. You guys know I'm rocking the Chart Addicts. I want to encourage everyone to learn how to trade, but I understand it's not for everybody. I understand that not everybody wants to become a boss-ass trader. I get that. Not everybody wants to join Chart Addicts and become the best trader in the world. I wish they were. I wish all of you guys wanted that for yourself because you deserve it and you can get it and it's in reach. But if you don't want that, I'm not going to judge you either. What we're going to do is we're going to put some of our best traders on the fucking job. We're going to make sure that they spend all the time on the charts. We're going to make sure that they're putting in all the right work, and you guys can take advantage of it. You pay us a monthly fee, and we'll do all that work for you. The only thing that you're responsible for is your risk management. Don't go out here fucking over-risking your account, making us look bad. You will make money as long as, as long as you're using proper risk management. Now, obviously, past profits don't equal future results. Let me go ahead and put that disclaimer on there. All right, bonus thing. I'm going to show you guys the 4 main factors that I look at on how to gauge the health of an economy. So I know I promised you guys this at the beginning of the stream. I'm going to walk you guys through this real quick. 4 factors on how to gauge the health of an economy. Here's the 4 things that I look at. The first and most important is GDP. GDP is the total productive output of an economy. GDG, what? GDP. All right, so GDP, basically the size of the economy. Let's just keep this real simple. This is a masterclass in macroeconomics in about 30 seconds. I hope you guys are ready for this. So there's the gross domestic production, which is all the productivity in the economy, and you can translate that to basically the size. So the size is either going bigger, so it's growing, or it's shrinking. So it's a expansion or a contraction. Then we look at employment. The more people in your economy that have jobs, the better. When people have jobs, they spend money. When people have jobs, they save for the future. When people have jobs, they buy assets, they buy houses, they take care of their families, and the whole economy thrives, and the government has tax money. So employment, you're either increasing or you're decreasing in employment. Then we look at CPI. Right now, we're looking at CPI also, not even CPI. I'll do inflation as a whole because we're going big macro. I'll do inflation, but I'll put this one off to the side. I want to see if there's anything I'm missing here. We got GDP, we have employment, we have inflation, and what else? What would be the biggest measure of health? Inflation, we're going to include all the important ones. So we're going to include like consumer inflation, asset inflation, and wage inflation. And I'll show you guys the difference. Wage inflation means your salary is going up in proportion to the cost of goods and services is going up. Consumer inflation, that's shit at the grocery store is getting more expensive. Asset inflation, this is your house and your stocks and your crypto is all going up. So inflation comes in 4 different ways. You can look at currencies. All right, I'll say the currency. This is what I look at personally. And then I'll say the bond market. The currency and the bond market. So these are the 3 biggest economic factors that I look at. And then because we're sort of in an inflation crisis, I look at inflation right now. So currency, are they expanding the currency supply, or are they shrinking the currency supply? Is there more demand or less demand for that currency? Is the currency extremely strong compared to other global currencies, or is it shrinking? Or is it sort of underperforming compared to other global currencies? So currency markets are a very big tell of how strong an economy is. Then there's the bond market. The bond market is a very different thing than the currency market, but it's basically the reputation of the government and their ability to pay you back. All right? A bond is basically you give money to the government, you loan the government money, and the government's going to pay you back in 2 years, 2 months, 5 years, or 10 years, depending on the bond you buy. And they're going to give you a certain percentage of interest. So when things are popping and the money or the government really needs your money, they're willing to pay you a huge percentage. But when the government ain't doing too hot and there's interest rates, things like that, that play into the bond markets, they're not going to pay shit in interest. So nobody really goes out there and buys bonds. So those are the 2 main metrics that I look at in terms of the capital markets or in terms of financial markets. I look at bond markets, I look at currency markets. You can also look at their stock market, but there's only a few stock markets I watch. There's the German stock index. There's the, what is it called? There's the Nifty 50. I think that's the British equity index. There's the Indian equity index, which I don't really watch, but I just started pulling up. Then obviously the US stock market index. And so the US equities are my main focus. Other indices, not really a big thing for me. The Enigma app has 87% win rate, dope as fuck. Yes, sir. I mean, once we close this NASDAQ trade, which is in break even right now, it should be bumped up to 90%. So fingers crossed, we cross over to that 90% win rate. And 90% win rate on signals is not light. Like, I don't know who's really pulling win rates like that, especially with the risk and reward that we have. So I actually have a challenge for everybody watching this, especially the haters. Go through and map out all of our signals on Enigma for the next however many months and put them on an Excel sheet. And I want you guys to track the win rate, and I want you guys to track the risk and reward and the total pips caught in profit. All right. I think it'll be really, really cool experiment, because I want you guys to see this shit for yourself. Results, numbers don't lie, people. Numbers don't lie. Right? Usually analytical people who study their results like this are very boring. They have no personality. They don't have a squad like ChartAddicts has a squad. It's a very boring culture. They don't really win or make money. They don't really make money like that. But we're very technical people. We're very organized. We're very transparent with the results. We're very analytical. We track everything because we want you guys to see it for yourself, but we're also lit as fuck. And so it's a dangerous combination. Do you guys think God, you guys are gonna make me fucking act up. Do you guys think that I asked to be like this? Do you guys think that ChartAddicts, we asked to be like this? To be just so technically gifted in all these different areas, but to also just have this sauce like this? To also just be dope as fuck? I don't know what to tell you guys. I didn't ask for this. This is natural. This just comes off natural. A 90% win rate, full transparent results, and we got the dopest culture in the game. Come on, people. Come on, people. You can't make this shit up. All right, if you guys are traders, what I'm gonna do. Oh, wait. Just to kind of wrap this up. I know my ADHD is acting up. I'll basically just kind of go through different topics. Let me wrap this one thing up, and then I'm gonna let you guys go for the day. I'm actually go through charts after this too. But real quick, these 4 factors, if the size of your economy is expanding, that's good. If more people have jobs, so the unemployment rate is going down, that's good. So more people have jobs, that's good. If your currency is at a healthy rate, which means it's not too strong or too overvalued compared to other currencies, or it's not too weak compared to other currencies, then you're sitting in a pretty good spot. Right now, what currencies are strong? The dollar is strong compared to other currencies. I wouldn't even say the pound is strong. There's nothing else. The dollar is just crushing everybody. The euro is weak. The yen is weak. The pound is weak. So you kind of look at the currencies because of how much they've printed compared to other countries. It's going to affect the value of their currency. And then we'll look at the inflation rate. Yes, the price of goods and services is going up in your country, but are people getting paid more? And if they're not getting paid more, that means that they're going to be very, very upset here pretty soon. Because you have to understand the majority of populations across the world live paycheck to paycheck or worse. They're living on credit in a lot of cases. And so you already don't have a lot of extra income at the end of the month, which is a dangerous place to be in, but that's just the reality of the situation. So now when the price of goods and services starts going up, like let's say haircuts are going up by 20%. They're paying more for their kids' haircuts, or they're paying more at the grocery store. They're paying more at the gas pump. They're paying more for their insurance rate. Everything is going up. They have no more income at the end of the month. And that's going to create a lot of tension. So inflation is a big deal, and wage inflation is a big deal. Those are the 4 factors: GDP, employment, currency and bond markets, and inflation. There you guys just got a master class in economics. You now have a PhD. He said also 30-day free trial. What else do you guys want? I don't know. I'll be honest. It's a 30-day free trial for a 90% win rate. You'd kind of have to be fucking, you kind of got to be stupid to say no to that kind of deal. I'm just saying. Some guy says, hey, it's a free thing and it works. I'm like, it's a free thing and it works? And I can try it on a demo account if I don't believe it, just to make sure it's real? I'm going to say, shit, let me take that offer. I don't know a lot of people that say no. So I don't know. You guys have to ask yourself to look at the state of you. You have to look at the state of you and make a reevaluation if you're looking at a deal like that and having some doubts. I work in northern Indiana, the heart of RVs, and many plants are closing or going down in the numbers for the next few months. Not good, people. Not good. Let me show you guys a few things. Bureau, labor statistics. I know I just butchered that. I don't get paid to spell on these streams, people. All right. We'll look at labor statistics. We'll also look at the NBER, which is the National Bureau of Economic Research. This is the people that the federal government and the Treasury said were going to be responsible for calling the decision. They basically said, no, Roy, you can't go out here and make your own judgment on when the recession hits. Roy, you can't use your own analytical biases and your own analytical frameworks to put them through a stress test to look at all the different factors and make a decision on whether or not we're in a recession. You got to call the NBER. You got to call them daddy. They're the ones that can tell you when the fucking recession is. People, fuck. All right, I'm going to say this. Hopefully I don't get taken down off YouTube. Fuck the government. Fuck what? How the fuck is the government going to tell me what I can and can't use as data to gauge a recession? What kind of stupid shit is that? All the data is right in front of me, and you're telling me I can't look at the numbers and make my own judgment about whether or not I got to use the NBER? Okay, well, fuck. I've already decided that we're in a recession, which is why I wrote that long-ass article that, yes, none of y'all read. It's under the free services tab on our website, chartaddictsfx.com. It's in the link in the bio. But if you guys go to the analysis tab, you look at the 2022 recession full picture. You'll get a full idea of why I think that we're going into a recession, right? You look at all the things like monetary supply, NASDAQ 100, the M1 money supply, the dollar, and I'll show you guys exactly what's happening. So they're going to sit here and tell me that I have to use the NBER. Okay, so this is the government's #1 gauge. Let's see what they're seeing. So unemployment, this is one area of the economy that's still holding strong. So if we look at all the different things happening in the economy, the unemployment rate is still holding strong. We still have a 3.5% unemployment rate, which is the lows. You guys see that's the average lows, way lower than any of the great times in history. Now, whenever it gets extremely high, the unemployment rate gets high, that's when we start to see a recession. And so the only reason that we're not really worried about a recession right now is because the unemployment rate is still holding pretty low. All right. But once the recession is announced, that's when we start to see the unemployment rate pick up. So for now, it's still holding strong. But as the recession gets called in the next 2-3 months, we'll start to see those numbers come back up. Labor statistics. I want to show you guys a few different things. So let's look at unemployment. Actually, fuck unemployment. Let's do. All right. What do I want to? There's 4 main things that I look at. I know I love the 4s. Let me give you guys 3. I think 3s are easier to remember. Let me give you guys 3s. Here's the 3 things I look at for employment. 1, obviously the unemployment rate. I'll call this UE. UE is unemployment. I look at the unemployment rate, the headline unemployment rate, just to kind of gauge where we're at in the economy. So we know that we have 150 million working people in the US economy. I'm going to use the US as an example here. We have 150 million people that are able to work, that are of age, able-bodied, and able to work. The unemployment rate is 3.5%, right? So let's do some quick maths. You guys let me know in the comments, because I'm not going to take out my calculator and do this shit, because I'm doing a lot already using this brain power to give you guys this sauce. So if you guys can help me out here, what's 3.5% of 150 million? What's 3.5% of 150 million? And yes, y'all, if you guys are watching this, just drop a like and subscribe. It takes 2 seconds. Look, I'll show you how to do it. Here's a like, and there's no subscribe button because I'm in the back end logged into my own account. But hit that like and subscribe and go ahead and show some love. But what's 3.5%? I'm new to trading. Can I learn and earn? Yes. Ausenbor Mavis. You can. But let me know. 3.5%, 150 mil. Talk to me. Since writing that article, has any of your charts stood strong or look manipulated? A lot of the charts that I went through in this article, they're not day trading charts. They're way higher time frame. They're kind of corollary charts. So they're not going to change at all in the small amount of time. The only one that's made a giant difference is the NASDAQ 100. The NASDAQ 100 kind of had this really sharp decline, As soon as we hit June, it started to turn back around. And so this is more of like a 10-year chart of the NASDAQ. And we just started having a recovery. This is the only one that's changed. The M1 money supply, actually, let's check this. Let's do M1 money supply on the Fed website and see if there's a difference. St. Louis Fed, M1 money supply. And then what was the view that I was using? 2013. Let's do 2013 here. How the fuck do I edit this? Let's do 10 years. Beautiful. All right, no real turnaround. No real turnaround as of June 2022. I mean, this is obviously it hasn't reflected the July numbers yet. As I said earlier on the call, $100 billion is being pulled out of the economy every month. So we should start seeing a lot of we should start seeing a little bit of a decline here. But you guys can see the M1 money supply, which is the total, let's just call it the money in the market, the amount of money available out in the market, was at $4 trillion pre-pandemic. After the pandemic, it's sitting at fucking $20 trillion. Now, people, I don't know what the fuck is up with the Fed and how the fuck they thought this was a good idea. But imagine in 15 or 20 years, they're going to be reading about this in a textbook. And somebody's going to sit there, they're going to read it, and then the headline's going to basically say, they went from 4 trillion to 21 trillion. And they really had the fucking nerve to say that it wasn't money printing that caused all this inflation. They really had the audacity to be like, well, I don't know where this inflation's coming from. Maybe it's Putin. Maybe it was the Russia war. They're going to be like, the kid's going to raise their hand and be like, are you telling me that they printed $16 trillion? They didn't print it, but they introduced $16 trillion into the M1 money supply. And they're wondering why there's inflation? Holy shit. People, we were running for the past 10 years in a bull market without having all that money printed. Now we just printed 16 trillion. A lot of the prices for cars, homes, vacations, assets, they ain't coming back down. They printed this money. The asset prices have gone up. The fucking minimum bar to play has gone up for a lot of people in the world, a lot of people in the country. So 3.5% of 150 million is 4.5 million. So are y'all doing math? Or y'all fucking with me? Y'all gonna make me take out my goddamn calculator. 150 million times 0.035. That's 5.25 million. Wait. Now y'all got me thinking about this shit. Yeah, it's 5.25 million. Are y'all fucking with me? So there's 5.25 million people unemployed. That's the unemployment number. I was going through the 3 different things I look at for unemployment. So there's the unemployment insurance, then there's the quits rate. This is the number of people that have left the workforce that month. And then the JOLTS report, which is the number of open jobs in the economy, which right now I believe we're at 11.25 million. So we basically have 150 million people that are able to work in the country. 5.25 of them are on unemployment insurance. Wait. I think the unemployment rate is just strictly people out of the workforce. Let me see where the actual unemployment rate is, or the amount of people that have applied for unemployment insurance. So yeah, so okay, my bad. Unemployment, obviously, number of unemployed people, then the number of people that applied for unemployment insurance. So I guess there has to be 4. I want to keep it at 3, but we're going to do 4 just for simplicity's sake. Damn, I just X'd out of that whole thing. we'll basically explain this concept. So there's the number of people that are filing for unemployment out of those folks, which, as we can see, here's the unemployment claims. The number of individuals who file for unemployment insurance for the first time, 262,000. So that's the number of people who are filing for unemployment insurance that month. So I look at all of these different factors to basically gauge, okay, there's a bunch of open jobs. And so if there's more unemployed people and this number goes up to 10 million, so we double in unemployment, there's enough jobs for us to fill. So we should be good. That's kind of like everybody's sentiment right now about the labor market, is that there's so many open jobs and there's so much, and we're at such a low unemployment rate. There's nothing to really worry about. And so that's why we're not really concerned about a recession right now. All right, everybody. So again, just to go through that, if you guys are interested in learning how to trade, personal coaching, education courses, chartaddictsfx.com is the place to go. Over here, Enigma FX, brand new app that we just launched. You guys get a free month. Don't miss out on the chance to get a free month. We won't have the free trial running for long. We're probably going to put out the free trial in September. So you guys have until all of August to take advantage of getting a 30-day free trial to come and use the Enigma app. So great seeing you guys on the YouTube stream. We'll see you guys on Thursday for live trading. And again, happy and safe trading. Take it easy. Peace.